We can unpack this with Naeem Aslam. He's the Chief Investment Officer with Zaye Capital Markets and joins us from London. Hi there, Naeem. So has the AI trade finally run out of steam, or is this just a healthy correction?
Sure, thanks for having me. I think the answer is it's just a healthy correction because there is still much more room to go. But there is no doubt in what you have said, and that is absolutely correct, that there's just too much optimism. Valuations are not making sense. There are a lot of different signals, signs, flags, which you can compare today's market's reaction to what happened during the dot-com bubble. And I think because of that, there is some large amount of a profit taking place. But the fact that this particular market continues to move higher, that is making traders think that, look, there's this element of a FOMO because president is in the office. And he's one of the presidents who actively not only talk about the stock market, but he specifically highlights stocks, for instance, from Intel to IBM, which are all AI play, which is all of the quantum play. So I think because of those particular factors, investors are having those particular feeling of FOMO while being cautious at the same time as well. As you correctly mentioned, these markets have hit record high. And then, as I mentioned, there are so many similarities of what is going on in the market today because of the AI promises, not the actual delivery to the larger extent, but the promises to what happened back in the dot-com era.
Naeem, when it comes to Japan's Finance Minister Katayama, he's explicitly warned of resolute measures after spending $70 billion last month. How much actual ammunition does Tokyo have left to reverse a 40-year low without an aggressive rate hike from the Bank of Japan?
Yes, so there are two important things to unpack over here. Number one, I think they still have plenty of ammunition in their coffers in order to do such interventions that they have done. They've already done two of those ones with pretty much the same amount of $70 billion. But how much ammunition have that? They have over $1.3 trillion worth of ammunition, so they can continue to go like this for a few times. But again, I think it is the important element for investors to understand is that is not going to solve the problem. But the fact is that the yield, which you've alluded to earlier, the interest rates, right, it's just a lot more attractive for investors in terms of the dollar in comparison to the yen. And because of that particular reasons, investors continue to sell the yen against the dollar. And there is the chances are that the only way out for them, for the BOJ, would be to increase the interest rate. But because of the structural issues and the way that the BOJ operates, they do not have much options to really to do that. So the only options for them right now is what they have done 2 times previously in the last few months. And then that is just to continue to intervene, continue to support yen by buying it on the market.
When it comes to gold, it has dropped because inflation fears are returning. But how are global commodity desks reconciling the drop in crude prices with the rising yields on short-term U.S. sovereign debt?
Yes, look, I would disagree to that particular statement because, as your earlier guest and then you've covered in the segment, look, the sentiment has changed towards oil prices, and oil prices are very much underpinning those inflation expectations. And if we look back at what the Federal Reserve did in the last meeting, or shall we say that the first meeting for the new Fed chairman, now the dot plots are out of the window. So basically, every single meeting is a live meeting, and then this particular week's data, which is coming on Thursday, i.e. the PCE inflation, is going to soften those particular expectations. And then the more softened those expectations are around inflation, every meeting will determine that how and where the interest rate will move. And that is going to be very much the huge determinant. But I do agree that in the options market, which is one of the sentiment where you will gather, we do see large amount of puts skewed, i.e. in a very simple terms, there are more sellers in the market. And that means that the more people are thinking that gold prices will go down rather than go to the upside. But I think that we need to be a little bit more cautious in relation to that one, because the damage that has happened as a result of this particular war, the rift between the US and its allies, and the overall where the US sits in terms of its position is not repairable at all. And that really makes gold highly attractive in a long-term position. And that is what traders should be paying attention to. And the long-term investors are already positioning for that.
Thanks for breaking that all down for us, Naeem Aslam. Appreciate it.
Thank you for having me.